Good morning, everyone. It gives me great pleasure to welcome all of you today morning for this session on driving the green agenda, emerging investment sectors in India. This is a part of a program, an annual program that we have been running with NEEF funds for the last 1 year. IIC, as you are aware, is a member-based organization with close to 70 members now. Our members comprise of asset owners, asset managers, philanthropies, foundations, trusts, family offices, as well as other impact ecosystem players like law firms, advisory services, and advisory firms. IIC works in the areas of what we call as 4Ps, which is policy, partnerships, programs, and publications. Under policy, we have closed-door interactions with our ecosystem, which is the RBI, SEBI, Ministry of Finance, and IFSCA. We don't advertise for these sessions on LinkedIn. It is a members' exclusive session wherein we collate suggestions from our members, and then we have these closed-door consultative sessions. Under partnerships, we host our flagship India Room programs, which is a LPGP event meet. We have this internationally as well as within India. The partnerships vertical is also responsible for expansion of IIC's membership base. Under programs, which this event is a part of, we have workshops, masterclasses, and webinars. Till date, we have done 2 programs. The first one was with USAID on blended finance, which was the India Blended Finance Collaborative. And with NEEF funds, we are running this climate financing program. Under publications, we come out with a monthly newsletter called as Market Pulse, which amongst other things is more known for its deal tracker, wherein we track deals on the impact space. In addition to that, we come out with half-yearly bulletins, one on blended finance and the second on climate. Our program with NEEF funds has been running for the past 1 year. We have had a masterclass understanding the implications of SFDR on climate tech investing in India. We also presented investment opportunities in the climate sector to the Nordic investors in a meeting in Bombay. We held a consultative session on how could additional private capital be deployed towards climate adaptation. We also hosted a webinar on integrating gender lens into investment decisions for the climate portfolio. We even had a webinar on COP29 and the future of sustainable investing, opportunities for the Indian investors. Today's workshop has leading investors, enterprises, and industry experts. In this session today, we aim to identify investment opportunities, facilitate knowledge sharing, as well as mobilize capital. We are joined today by 3 of our knowledge partners, CPI, Climate, and Rehive. Our focus sector today is going to be on zero-emission trucking, investment in access to water, and sustainable cooling solutions. The session flow is going to be as follows. We are going to start with sector insights, wherein the knowledge partner will present on the sector, which will be followed by a small panel discussion by the enterprises on their business model. We will also have some discussion on investor priorities and investment alignment. This will be followed by an open house for the respective sessions. I would encourage everyone to participate actively during the open house. We got a little delayed because of the usual congestion on the Delhi-Gurgaon road. Apologies for that. And I would now invite Sarthak Khurana from CPI to begin his session. The timing as mentioned on this screen may get a little delayed, so we can expect to break for lunch at around 1:40, 1:30, 1:40 types. Yeah, thank you. Sarthak, please.
Thank you so much. Thank you for inviting me. I'll very quickly introduce myself and my organization. I am Sarthak Khurana from Climate Policy Initiative. We are a research and advisory organization. We typically work with governments, private institutions, and stakeholders across different economic segments to drive economic growth through innovative business solutions, financing solutions, with a lens on climate change. So I'll very quickly walk through the presentation. So just laying out the context, why should we even talk about electric trucking as a sector? Trucks are a very significant source of emissions. Primarily, they can be mitigated by two technologies, battery storage or hydrogen fueled. Hydrogen fuel broadly as fuel cell technologies. And it is not just the environmental angle why zero emission trucks are an important segment. It's not just sustainability, it's lowering of the operating cost and energy security for the country as a whole. If we look at the growth outlook, India's truck fleet would probably exceed 17 million units by 2050, which is a huge opportunity and also calls for an urgent action to make sure that not all of it is fossil fuel based. On the policy and ambition side, India aims for 100% clean fuel vehicle adoption by 2047 and has set itself a target of mid-century, that is 2050, to have the entire trucking fleet on zero emission. And this is adequately supported by the government policies and missions. So Ministry of Heavy Industry has a zero emission truck as its key priority. We recently saw the PM Drive mission come out, which also had electric trucks as one of the key focus areas. And Indian zero emission trucking policy advises already has 30 targeted interventions which need to be taken into account as we go forward. And infrastructure, incentives, and innovation is what is needed in this sector to actually spur the sector forward. I will not dwell on this too long. I'll just come on the next part on what is the need for electrification. So roughly 40% of the emissions that we see in our cities and on our roads, CO2 emissions, come from the trucking sector right now. And this will continue to rise as our economy grows, as we industrialize, this emission will continue to rise unless something changes. Also, this means a lot of fossil fuel consumption. 38% of India's fossil fuel consumption comes from the road freight sector alone. So if we are able to mitigate that, that means a huge opportunity for the country in terms of energy security. And that will improve India's balance of trade as well. And what this needs is businesses are increasingly shifting towards sustainable supply chains. And zero emission logistics are a critical component of this shift. Regulatory policies, incentives, and corporate goals are actually the ones that are driving this. In terms of market projections, sales projections, so we are likely to see a huge growth in the electric vehicles segment, especially in the commercial freight vehicles segment. The medium and heavy commercial vehicle segment is shifting very rapidly towards electrification. We have seen a lot of players, existing and new, come into this segment. Some of them are already in this room. We'll even talk with them just right now. So if we look at the broad LCV, which is light commercial vehicles, medium and heavy commercial vehicle segment, it is likely to grow from roughly $100 million last year to over $6 billion by 2030, which is a 98% CAGR. Looking at it from an investor's lens, there is no better J-curve to look at in any other business segment right now. The sales projections are likely to go up from 2,100 units right now to roughly 250,000 units. And this is primarily in the medium and heavy vehicle segment. So there are a couple of OEMs who are driving this. We have the usual Tata Motors, Ashok Leyland. There are newer players like IPLT. We have them in the room. We'll have a chat with them after this. Omega Seki, Propel Industries. And also government and corporates are incentivizing moving to zero emission fleets, which are actually driving their adoption. If I look at the opportunities side of it, where do the opportunities lie in terms of the electric trucking segment? There are 4 broad areas, and the investment opportunities exist across all of them. Vehicle manufacturing, battery supply chain, charging infrastructure, and fleet operations. Not only are we seeing opportunities on the real sector side of things, we also see a lot of financial innovation taking place. So we are increasingly seeing leasing models and asset management solutions that are coming up, which are driving investments. Uh, if we look at the different business models that are emerging and are already there, direct purchase model has always been there, exists in this segment as well. It helps lower long-term operating costs. What we're also seeing is leasing as a service. We'll talk about more in just a bit. And so this is making the ZET market more and more accessible to newer players. Then there is battery as a service. So as we understand, battery is the most expensive component of any electric vehicle. The electric truck is no exception. So battery as a service is another model that is emerging. And increasingly, we are also seeing pay-per-use or subscription models. If you would like to say a Netflix or a Geo model of electric trucking, where vehicle utilization is designed to be paid based on the utilization of the vehicle. So it helps increase the affordability for newer businesses to also take on this segment. Uh, we are seeing different players come in. We are seeing the market expand. We are seeing newer players come up. So very clearly, the investment option and the opportunity is very promising in this domain. Uh, if I may take a few moments to actually talk about the deals that have happened. There are some players who have actually put in a lot of money. So Tesla Motors, $60 million of investment, 1,000 heavy electric trucks by 2026. Pepper is putting in $557 million of investment for EV buses and EV trucks. They're setting up a facility in Andhra Pradesh. Murugappa Group already has acquired IPLT, $29 million, and they're strengthening their presence. Macquarie has come in with Vertello. They have put in $1.5 billion in EV solutions platforms. So there is a lot of money that is going, and this is through GCF funding. So they've signed agreements with JBM, Eka Mobility to actually take this forward. Then there is Electrify, which has $3 million of seed funding, ADB Ventures, Advantage Founders. The list is not comprehensive. This goes on. I can talk about this at length, but let's call on the practitioners and have a discussion with them. So if I may call upon, so can I start with calling upon the real sector professionals, and then I'll call on the financial sector if that is okay. Can I call upon Mr. Ajay Pratap Singh, Mr. Sunil Bhatnagar, and Mr. Chetan Bhardwaj? Distinguished panel we have here. Mr. Ajay Pratap Singh, he is a co-founder and CEO of Switch Labs. Mr. Sunil Bhatnagar, he is a CXO at Lithium Project IPLT. And Mr. Chetan Bhardwaj is DGM Olectra. They're very, very experienced professionals working in this space for very long. So I'll start with you, Mr. Ajay. So we have seen that electric trucks, they are different in their operational dynamics, build structures, how business models operate in this space. Could you actually help us understand what are the learnings from the business model that you work in? And what are the key challenges that you see in the ecosystem today, and how can they be addressed?
So, yeah, good morning, everybody. So, we started this, we founded and started this journey around 2 years back. And we have deployed our first fleet around 8 months back with IPLT 55-tonner truck, and it's already running with JK Lakshmi Cement. So, business model is very straight. There is no secondary market as of now. If we compare with the traditional logistic industries, truck industries in India, their business model is usually run it for 4 or 5 years and then sell it out in secondary market and make money out of it. But here, first is capex is huge, at least 3 to 4 times of traditional truck. Second, there is no secondary market. So the only way to go for it is a long-term contract, and we are going for 8 to 10 years contract with all cement and metal companies. Why cement and metal companies? Because they already have their targets and they already understand this, and they already have a public commitment as well to go for EV trucking solution. So uh, you can say they are the first mover and we are targeting them only. We are going for 8 to 10 years contract because of in absence of uh, secondary market and high capex at upfront. Second is like the charging infra, obviously one of the biggest roadblock. So as of now, we find out that we deploying charging infra ourselves. It means it's a kind of full stack model where we are by purchasing trucks as well as we are setting up our own charging infra. There are a couple of things because if I am going for a third-party charging infra, it's already very competitive market. Trucking is already even the present diesel trucking is also very competitive market, and whenever I am going for a long-term contract, every customer, every client is demanding certain discounting because he is giving me a long-term business assurance and long-term guarantee. So, and I'm already paying at least 3 times more capex than my diesel counterpart. So, in that sense, we have to save every penny, and for that, we found out that if I'm going for a third-party charging infra, I will never make money. So that's why we decided to go for our own creation of our own charging infra, uh, somewhere inside plant, inside customer premises, some on some route on the highways and all, and also one of the deployment that is undergoing means so on that deployment at the both charging hub we are deploying around 30 EV trucks, and on the both charging hub we are taking a connection of around 1.5 megawatt and 2.3 megawatt respectively, and we are ensuring that 80% of our electricity demand will be met by solar wind hybrid in open access mode. So that kind of things will make us our electricity cost go down by at least 2 rupees from the present grid cost, even the present grid EV tariff as well in that respective states. So these are some of the challenges that the customer are not very much agree for giving us a long-term contract with a binding contract kind of thing. And second is they are demanding huge price cut because they are giving us a long-term commitment, and they are saying that we are displacing our existing transporter with you, so we need this kind of discount. So these are some of the observations that we have felt during our talks and wherever we are doing it.
Thanks. That is very interesting and deeply insightful. One of the questions that I had because of the business model that you're currently working on, it would require a lot of partnerships and synergies across players. So could you give a little bit of an insight about what kind of synergies are needed from OEM, charging infrastructure providers, as well as from the investors as well?
So yeah, means initially for the first truck deployment, it was very difficult to raise finances, and we got finances at lower LTV and a very higher percentage from NBFC. But from that, things have changed a lot for us. And OEM, obviously, OEM support is 100% needed, and we are thankful to OEM that even with a small fleet, they have a dedicated a small workshop kind of thing, and also 100% availability of one person to address any of the AMC requirement. And we already tied up with a long-term AMC excluding battery change, the battery change option is also there, where they charge upfront some amount as a per kilometer charges, which will cover the eventual battery change as well. And without battery change as well, so AMC-wise, a good collaboration required from all the OEMs. Second, about the financing side, so yeah, means like financing is still a toughest challenge, and fortunately enough, I can't reveal the more details, but we are about to close a big finances for like equity financing for us. So, but it's means like for every new player, it's a big challenge because we have visited many shops, and like people are not still very comfortable with the market and OEMs and all.
Okay. All the best with your equity raising. I'll actually move to Mr. Sunil Bhatnagar. So, as we were just discussing over coffee outside, that the value chain in the mobility e-trucking space is becoming increasingly important, and indigenizing the value chain, exploring global joint ventures, partnerships, engagements is becoming a very critical aspect. So how do you see the importance of developing an indigenous value chain, especially in the battery segment in India, becoming critical for electric truck deployment? And is there anything that you can share from your own company's experience in this regard?
Thank you. Good morning to all. So I am from IPL Tech, which is a Murugupa Group company, and we make electric trucks of heavy duty, 55 ton. And we are doing this project for last 3.5 years. So we were the earliest one who entered this field. And in last 2.5 years, we have sold quite good number of electric trucks, running mainly in the closed loop because national highways are not ready for that kind of charging. We need very high level of charging. So that kind of charging is not available. So it is in closed loop. So coming to supply chain question, which is given to me. See, if you see a truck, if you analyze a truck, there are two important parts. One is the powertrain and another is the battery. And powertrain will never go anywhere in coming years. Only the consumable item is battery, which will degrade with time, with temperature and with other operation things. So we have zeroed in accordingly that how to go about it. And we have decided to put our own plant of battery. So we have a battery assembly plant of 2.2 gigawatt hour because our battery bank in the truck is of 258 kilowatt hour in one model and 286 kilowatt hour in another model. We have 3-4 models. So the 258 is the most running one. It is the oldest one which is running presently. So what we have done, because see, every time if you see how to put a truck on road, the homologation plays a very big role. And the supply chain management also plays a very big role. We have seen in COVID and all these years that what all challenges we have faced in those times. So homologation of cell, homologation of the battery, then homologation of the vehicle itself, it takes a very long time, maybe close to 1 year or something like that. So you can't change your supply chain very frequently, first thing. Second, when you zero in for a component like battery, which is the most critical part in the truck, you have to see the quality thing about the cell, about the company, who all are the companies who will support you in long term. There are some very big companies, but they may support you, may not support you in the pricing after 2 years because of the volumes they are doing. So you have to see that how to select your best partner who will support you in supplying and technology both. Because India initially is slightly weak in technology when it comes to EVs. And still we are not doing the cell part. The ACC scheme has come now. Cells will also be available locally. So all these challenges are there. So we have defined the challenges and one by one we have started to address the challenges. So first challenge of the battery is addressed already. And the second thing which is there is because we are doing for 3 years. So a lot of trucks are running and some trucks have done even few lakh kilometers individually. So we have seen that what all parts need more attention. So that way also we have reworked to the last thing. And now we are not facing any issues basically. And like Ajay also mentioned about the after sales. So we have a dedicated after sales team where whenever we do any contract, we supply a 140-foot container along with the spares with the first lot itself for after sales. along with 2 engineers on the site for 24/7. So our uptime is very good. We sign all kind of contracts for uptime. And we have a AMC clause for 10 years, so that there is anxiety of battery will go bad in 3 years or 4 years. So everything is addressed in the AMC clause, because we have a AMC of 10 years or 9 lakh kilometers, whichever is earlier. So that way we give quite confidence to the financiers, to the operators and everybody that, okay, we are there to support you. And Murugupa is such an old group, so people know that, okay, we say something, we will do that. So that is from my side.
Great. It is very heartening to see that the challenges on the technology front and on the indigenization front are actually being tackled and being taken head on, and we're actually solving those. I'll come to Mr. Chetan Bhardwaj from Electra. So we talked about the battery value chain and how it is being indigenized. But when we look at trucking, probably batteries is not the only solution that we're looking at. We're also probably looking at fuel cell technologies, hydrogen ecosystem coming up. And you are one of the leading heavy duty truck manufacturers that is there. So what are your thoughts on the future of fuel cell technologies in electric trucks? How much time do you think it will take for them to commercialize, grow? And are you envisioning any partnerships in this space next 5 to 10 years?
Thank you so much, Sarthak, and a very good morning to all of you. And it has always been a pleasure to be in company of Ajayji and Sunilji. I think we are meeting for the third or fourth discussion actually on this very same topic. Well, to give you a brief about Electra. Electra is a name synonymous with electric buses in India. So many of you probably are not aware, but the first electric tripper that received homologation in India was an Electra only. So as of now, I think whatever the data is there in public domain, about 500 electric trucks have been sold in India. We have sold about 55 to our parent company, so that gives us more than 10% market share in this emerging market. And that gives us a right to be here in this discussion. Well, Sarthak, to answer your question, there can never be an only solution to any problem. Yes. Right? A simple 2 plus 2 can be solved in multiple manners. One is, of course, how my daughter would do it. 2 on your mind, 2 on your fingers. And second would be you split the first 2 into 4 minus 2, second 2 into under root of 4 plus under root of 16, something like this. We never actually try to find the solution to a problem. What we try to find is the easiest solution to a problem. So to answer your question, are battery trucks the only solution? No. But they are definitely the easiest solution at present and in the near foreseeable future, I would say. Mm-hmm. The issue with fuel cells is, yes, they have got tremendous potential. It's a technology that everyone is looking forward to. But the problem is, I mean, it has got some inherent advantages also. The refueling time would remain the biggest advantage over battery electric trucks. But the problem is we do not have the infra as of now. Yep. We are still trying to crack the equation of how to set up battery charging infrastructure. And now, are we willing to dedicate or divert a significant resources towards solving that equation, how to set up hydrogen, charging stations or refueling stations, sorry. Second is the cost of production, I would say. See, at present, the hydrogen is being produced through natural gas. Now, in order to make it truly a sustainable fuel, we need to focus on green hydrogen. Less than 5% of global production of hydrogen is green hydrogen at present because the process is very cost intensive. Second issue would be, now the government of India has also set up some good targets. I think in the national mission for green hydrogen, they have set up a target of producing about 5 MMTs of green hydrogen per annum. See, you need to understand one thing. At present, your petrol refineries, your fertilizer plants, your metal treatment plants, they all need hydrogen. So then the current estimate of their requirement is about 5 MMTs per annum only. Yeah. So even if we are able to produce that much of green hydrogen per annum, who would be the first beneficiary of receiving it? I don't think government will focus on giving this to the freights or the truck segment because these industries are polluting more than us, yes. Right? So to answer your third part of the question, are we envisaging any partnerships? See, as an OEM, we are keeping a very close eye on the developments taking place. But to say that we are right now in active dialogues with some agency, that would be an overstatement. So it's like a Schrodinger's cat for us. It is both dead and alive. Let's see what happens when the box opens in future. Thank you.
Thank you. Thank you for the very interesting perspective. And as far as the color of hydrogen, I'm just reminded of a session I was taking 2 days back for ONGC, where we talked about the 7 existing colors of hydrogen and how they are growing. So that is an interesting space to be looking out at. Before I get to the financial sector, I just want to wear that hat for a moment and ask the experts that are there already on the panel. So we understand that battery right now is the most critical component in this equipment. And the health of battery, the status of the battery is quite a critical aspect. And this is a question that any of you might want to take on. That how do you for example, if IPLT gives a 10-year warranty of sorts, AMC of sorts, so how do you monitor the health of the battery throughout the lifespan? And is there a mechanism by which this information can also be shared with financiers? Because if I'm a financier, that is primarily going to be my concern, that this is the most important, most critical part of the equipment. What is its health? And if I'm financing it, can I monitor the health of that?
Yeah, I will answer that. See, I am in battery industry for last 30 years and working deeply in different technologies and all that. Last 12 years, I am working exclusively on lithium. So what we have done, basically, we have our own software, because presently if you see this IoT and all these new technologies are playing a very big role. So we have our own software where we know each and every state of the battery, the truck, everything on daily basis and live in our office. So we have put up a system in the battery where we know that what time it is charging, what time it is discharging, how much is the SOH, how much is the SOC. So all the data will come to us, even at the cell level also. So if there is some temperature issue at cell level, it will come to us as a precaution that, okay, this cell is misbehaving. So our service team is already there in the field, so they can take care of it. So we have each and every data. Truck is running how many kilometers per day, where it is standing, what time it is charging. And this data is shared with the buyer also. And of late, MHI has called us. They have given this 500 CR thing in the PME drive. So they have asked us if we can share the data with them also. So we said that we are open to it. Till it is confidential with the government, so there is no issue. We are open to it. And similarly, for the financial institution, we can take a call. We can definitely discuss. Because the how to keep that data confidential is very important, because it should be used by the user or by the OEM or by the government or by some important agency which is involved there. Okay, so we are very open to it. So this IoT and these kind of platforms are very important presently, and we have everything available live. Around 200 trucks are presently running from north to south to east to west, but we have all data available in our office.
Thank you, Sarthak. There is absolutely no issue in sharing the data with the financial institutions. The issue lies, the OEM needs to be convinced what FIs are planning to do with this data. You know, there's a very famous quote by Mark Twain: data is like garbage. You should better be knowing what you plan to do with it before you start collecting it, right? So we can share the data, but what are you going to do with that data? You need to convince us on that front. Second question to financial institutions here would be, are you having necessary resources in place to make sense out of that raw data which will be supplied to you? You know, I'm not even touching the authenticity part of the data or whatever it is, but do you have the resources to make meaningful information or to extract the meaningful information out of it? A very simple example. We all have seen, you know, highway projects on PPP modes in India. You know how the billing system works? The concessionaire calculates the quantity of the work executed for the bill preparation. Now the NHAI, they have got their own team of engineers to recheck that data and validate it. But they also have what you call an independent consultant in place. Now that consultant does all the working. Again, you know, that person is deployed at the project site for throughout the concession agreement and everything. So there's a third agency that is doing the same thing. And when finally the bill goes to the financial institutions for, you know, releasing the payment tranches, they don't trust any of the data. They have what is called a lender's engineer. So that engineer does his own working to check, you know, whether the data that has been provided is authentic or not, or correct or not. So in an established field like highway construction, wherein, you know, the financing is in the tune of hundreds and thousands of crores, such complex system, bureaucratic system is in place. So I don't think as of now we have matured as a market to that level where we can, rely on the data supplied by one agency to another or from, second to the third. But yes, as Sunil sir said, if he has said he has no issue, we have no issue in supplying the data because he. So we can supply the data, but you need to convince us what exactly you plan to do with that data, because confidentiality, at least in the next 5-6 years, would remain a big problem before all the OEMs. Thank you.
Thank you. Actually, that is a fantastic segue for me to call the financial sector experts on the panel. Can I please request Mr. Rajesh Dwivedi of HDFC, Nishant Endani of Walters Green, and Mr. Shiva Shankar of Ankur Capital to please come out. Yes, please stay here. No, please. Well, I just have a. So I'll start with Mr. Rajesh Dwivedi. So we are seeing an increased focus on sustainability, net zero commitments, and that is also coming into the electric trucking sector. But as we just discussed, that this still remains in very early stages. 500 electric trucks is what is deployed right now. You are India's leading lender. So how would you characterize the current investment landscape for climate technologies such as zero emission trucks? And what factors do you think an investor looks for in zero emission trucking ecosystem for understanding the investment quality and the risk that you perceive?
Thank you, Sarthak. First of all, good morning again. I'll repeat the sake of the audience. The basic question which the lenders works on is the underlying asset and the revenue mechanism decides how we are going to fund. What could be the funding mechanism would be there. There are various funding mechanisms by putting escrow, by giving a term loan, etc. and etc. Now, as my esteemed panelists from the industry already has elaborated, this is an emerging technology, correct? And I have been from last few months, I've been in various forums where I've seen a lot of discussion happening on the sustainable finance, green trucking. In between, you would be also, we are in discussion with the ministries also, with the RBI, with the World Bank also, to develop a suitable funding mechanism for trucking business so that both industry interest as well as the lender interest is protected to the extent possible. But having said that, just as Chetan has already elaborated in a very elaborate manner, the data which we are going to talk about is not there. You will be surprised when we approach to Niti Aayog, I say, what is the health of the battery? How are you going to check the life cycle of the battery? How is going to load? What is the data that you get? IIT Madras is been appointed as a nodal agency for doing this pilot project, and which is still going on. The data has to be released, I think, somewhere in the May, if I'm not wrong. But having said that, as an institution, as a banker, we are trying to evolve a certain mechanism, hybrid mechanism, we can say, where few of the concepts are there, which we are working. One is that working with the OEM, how we can ensure that interest of both industry as well as the bank is protected. And soon you will see some light of hope coming in this sector, maybe probably next financial year, because this financial is already closed by next one itself. But yes, we are also eager to develop or devise a mechanism for funding for trucking, because we strongly believe that going forward, this is a emerging area, and we have to also modify our funding mechanism or lending process so that we are there in this market itself. Thank you. I hope I am able to understand your question.
Yeah, and thank you for the reassurance that we'll start seeing something next year. I'll actually come to Nishant from So we all understand the long-term sustainability benefits from technologies such as zero emission trucking. But there are some pitfalls that are there, the high initial costs, the slower payback periods, the regulatory frameworks still evolving, as we just talked about how Niti Aayog is still looking at some of the problems. So from your experience, how do current investments in this domain perform against other investment options? And what are the primary risks that you see and the potential returns that you see in this sector?
Yeah, I think that's a great question. First of all, just stepping back to that premise, whether it's sustainability advantages of zero emission trucking are well understood. I think we always talk about the CO2 emissions only, but there is particulate emissions as well as other energy transition benefits away from fossil fuel it offers to the economy, which are probably less talked about, why this is an important problem to solve. Yes, with that premise, when we go into the returns bit, the returns are lower than what you would get for putting out a diesel truck. In fact, when we are putting through electric buses and electric trucks, from our experience, the end customers are not in a position to offer more prices because this is a highly competitive market. You have to offer them a discount, the end customers, because these logistics is an integral industry for the entire country to be competitive, and who is going to bear that additional cost? So hence then the expectation to ask the end customers to pay more falls on deaf ears. Now, with that context in place, when you're offering a benefit in terms of a lower cost to these end customers, and you have to rely on longer payback periods, your model to invest in this kind of businesses has to change drastically. But it's not something which has not been experienced in the past. We are getting examples from renewables and the project finance techniques which were used in that space to take these long-term investment calls in these businesses. It's not like a startup, let me clarify this. This is green asset funding where you're taking 10-year calls. You can't iterate and get this right. We have to get it right in one go. So a lot of careful thought process has put in place when we are investing into the equity on certain of these assets or creating new businesses or getting in debt financiers like HDFC or SBI and other green lenders to support such kind of businesses. So there is a lot of bankability related aspects that we have to take care of, as well as risk mitigation and better economics that we have to solve for. Some of the aspects were already covered by the industry experts that, okay, can we have a long-term EMC of 10 years with infinite battery replacements? We do that on some of the business models, but at the end of the day, you can't expect the OEM to take on more risk than they can bite more than they can chew. Just relying on that EMC is not sufficient. You have to ensure that the battery specifications are right and meet the requirements of the use case that we are putting through. So far, the success that we have achieved has been in intercity EV buses, so which run a lot and you are able to sweat the asset more. So we are able to get better economics in place by ensuring there is a productivity gain. So instead of 2 times a day, the bus is running 3 times a day on the same route. That improves the economics. Now, in designing the project, having a minimum number of buses or trucks helps us reduce the charging costs. So we were able to achieve all-in costs of single-digit tariff for the first time in the country on one of the business projects that we worked on. And those kind of techniques are required, and a lot of thought process is required to build some of these projects, and it can take up to 18 months for a team to put together a project. I know that Ajay has been working for the last 18 months, each of the OEMs, in terms of building the service centers. They have spent enormous amount of time, and before they have decided to vertically integrate and provide more services. So a lot of sitting together, collaborating amongst the partners to de-risk these projects is essentially required. From the industry and different institutions, I would ask is that when we are thinking of investing so much time and energy, we have to rethink the business models in which we are consuming these products also in terms of moving to longer term contracts. That's been my key ask. that long-term contracts is the least that some of these end customers can offer, because we're putting up dedicated charging stations for these trucks and buses at this stage. Maybe at the second stage, once there is an enough volume of these charging stations that are in place and they can be opened up, then we move to shorter term contracts. But moving to shorter term contracts is calling for trouble at this point of time. And to achieve longer term contracts, the key challenge in terms of end procurement agencies that comes to mind is that, okay, if the truck costs are going down, battery costs are going down, why should I pregnate myself to such higher costs? Now, how do they justify that as a procurement team? And that is where offering a slight lower tariff or charge per kilometer versus diesel is something which we are ready to offer. But they must have these procurement obligations to buy these, to contract these trucks on a long-term basis. Steel, cement sector are responding well to this ask. Other sectors should, like e-commerce, should also think about that. I have not yet seen that. And these are the kind of conversations that we are having increasingly to de-risk these projects before putting in these investments. And I would say that as we de-risk and get involved in more and more of these businesses, like we saw in renewables, as this scales up, the OEMs are in a position to lower the cost of vehicles even more. And that's where you're going to reach that inflection curve where all of this takes off and you won't need as much support going forward. And it will be more beneficial versus diesel, and you can see a future maybe about three years from now where each of the diesel truck and bus operators are buying these vehicles on their own because it's economically better versus diesel. In fact, that is something which you hear from a lot of these truck associations. We'll end up going there. We speak with a lot of dealers and distributors. There's a lot of interest on buying e-buses and e-trucks because the diesel prices have gone up. They're so volatile. And I think we are almost at that inflection point, maybe 24, 36 months at max.
Sure, please.
In between, you have raised the point of AMC and the quality of the battery. I just want to add on that. See, this truck battery is a very expensive and very tricky thing. The cost of truck battery is close to 40-45 lakh rupees. Okay, it is not like a scooter battery of few thousand. So any company who is working deeply in the domain and who has a battery manufacturing plant also will not cut any short corners there. So battery quality is to be taken like this thing. We are so confident. That is the reason we are giving a 10-year AMC. Otherwise, we will never take a risk of 40-50 lakh rupees if we are compromising anywhere. So this thing should be very clear to the industry that if some big group is coming with a very heavy device, our battery weight is 2 ton. It is a very big battery basically. And it is just like an advanced fuel to the truck for so many years. And some of our trucks have already crossed 3 to 4 lakh kilometers on the same battery without any replacement. So we are doing things practically. It is not hypothetical or a lab case what we are saying. Our trucks have already done few lakh kilometers on the same battery. And we have everything, all the cycle life, state of health, state of charge, everything in our office available. And we are monitoring everything, each and everything. Because it is a reputation of the group. You can't cut corners there and somebody says that, okay, that truck is not working. So out of 200 trucks which are working, everybody is so happy and they are giving more orders. We have orders of around close to 500 trucks now in the funnel because our efficiency of the truck is so good and everybody is appreciating that. So I just wanted to add that. Thank you.
Great. Thank you both Nishantji and my expert from IPLT. I'll just shift gears metaphorically and come to Seva. So you have been in this space for some time. You have seen innovations happen and you have also seen some of the barriers that have actually stifled the growth of the sector. So if you were to identify a couple of innovations, probably the low-hanging fruits, especially in this early stage segment that this is currently, which actually can spur the growth of the sector, make more finance available, and as Nishant was mentioning, project financing which has grown magnificently in the renewable energy space. So what would it take for something like that to happen in this segment as well?
so absolutely. So I'll just talk through, not just from the Ankur Capital lens, because we're early
Yeah.
stage VC, but I'll try to talk through some of the notes that we've seen from how the private market reactions have been. But just taking the example that you called out of saying renewables and how that segment of the market has matured, that segment of the market got its maturity after you said technology proof point was there, you could reliably and not have to personally underwrite to the extent that the partners here are saying. That I wasn't underwriting this saying, I need to underwrite this specific version of this version of a battery, for this version of a truck, for this version of, how do I look at this OEM's capacity to actually be able to say the volume of what could be possible liabilities in case there are issues that come through, what comes back is. So all of these are maybe in the early part of the ecosystem. And I'd say if I just overlay that with where we see the maturity in the EV ecosystem coming through domestically, it's 500 trucks that are currently here, but you're looking at 1.5 million registered two-wheelers that we put out in the last year as well. So there is, even that part of the ecosystem is still maturing. You aren't saying the two-wheeler, the second-hand market, for example, even in two-wheelers to the point that was raised earlier by Ajay, that is that mature, are they really liquid and easy to kind of sell off there? But that will be the first part of the market to mature, and a lot of the lessons that, and the questions that were asked of, how do you as a financial institution that is trying to get this battery data underwrite that? What are you going to do with it? How will you build that analytics on it? Will prove itself on that faster ROI cycle, which two-wheeler, to the point that was raised earlier by Nishant as well, has a good utilization. Those vehicles are on the road and frequently used. You can get that data to just get generated at a higher frequency in these shorter ROI cycle models that will then replicate in of saying, okay, what are the skill sets from that to then transfer into what here, because even as you're looking at the capital cost of these vehicles declining, it is still going to be a while before you say it's anywhere near a comparable diesel-based truck cost. So because of that, you need these other synergies to come through. I think the other ones that you're looking at are applications and from battery levels on two fronts. One is saying fundamentally, can we look at how we can improve the charging process? Because to the point that was raised earlier, the reason you're looking at hydrogen and saying, is this a viable proxy, is you're thinking about saying, do I have to sit there with this truck and actually change the way it physically has to move as compared to just refueling it the way that a diesel truck would and just be able to get it back on the road fairly quickly at the time that it gives someone just a snack and bio break. If that is what you're trying to recreate, it is one of the options is you're fundamentally looking at very different batteries that don't degrade as quickly when that's the charging happens, or you're looking at a swapping option coming through somehow, which is borderline viable on four-wheelers right now, but for trucks, you are a step jump away. So I don't think these are imminent points that are looking at in the next 2 years, 3 years at all. But if we're looking at saying, how does this change the economics of these models, I think it's all things to look at of saying, as these iterations of the models happen, as what Ajay is building out of saying, we build this with concentration of a buyer, we build this part of the network. These upgrades will happen in technology shifts, which will allow them to have step jump improvements in their margins when those can integrate. So we see it more about saying these players that are here at the table are going to be the core infrastructure players that everyone else will build on, and can some technology lever come through. But for specifically for the heavy trucking vehicle market, I think you're a little bit further out. To say these are the ones that can come through. I think it is a few years out before saying here's some of those options that can really.
Great. Thank you so much. These are the questions I had. I'm happy to open the house to any discussions, questions that anybody in the audience might have. And please mention your name, your organization, and also if you're asking a question, who would it be addressed to?
Well, I work for a US company called Webtech Corporation, so we are into technology for electric buses and trucks. So I heard a lot about that what more we can do on the technology side to make it more effective in terms of better ROI, payback period. So we have been discussing in the past with several, Morth and DHI and others that why don't we use Pento-based electric charging for, let's say, electric buses as well as electric trucks. Some of, let's say, ARAI and IIT has also developed a prototype. We are the leading OEM. So it's just a suggestion that, okay, in order to reduce the size for the battery in the near future, and this model, I have worked for Siemens in the past, and so-called electric highway, this model has been deployed outside the Frankfurt airport. I would also like to add there that in terms of policy making, in Germany, the Ministry of Environment is also funding such initiatives. So even though we have been, I have been personally involved into this, and we have been talking to various ministries in India since 2018, met Mr. Gadkari also, but a viable solution that how it can be implemented is not being taken so far. So ministry is saying that it has to be self-sustainable model, that either the financing agencies has to fund or somebody has to pay for it. So, but the OEMs, we have the solution. So I think doing some parallel proof of concepts with these type of solutions will pave larger way for the future. So maybe anybody of you can give your thoughts that have you ever considered those things? What is the plan? How do you want to go about it?
One of the biggest hindrance that we realized when we were looking at those solutions was the infrastructure cost. Yes, it makes a lot of sense, especially in buses and trucks where you want more load carrying capacity to be available for carrying more people or freight. But building the infrastructure, the cost of building that infrastructure out across the country is relatively high as of now, but I'll let the experts take deeper.
No, I agree with you. What you are saying is correct, basically. See, presently what batteries we are giving, so there is a development in that. Earlier these batteries were charging in 2 to 3 hours. Now most of the companies are giving a fast charging model, DC charging, whereas megawatt hour charging is available. So these batteries get charged within 1 hour. Or maybe earlier also, it depends on your cell quality. If you are taking 1C, 2C, 3C, 5C type of cell, so the amount of charging you can increase accordingly. The higher the rate of the cells, the higher you can charge. So earlier people were using 1C cell, now most of the people are using 3C to 5C cell. So you can do fast charging. So that is one option which is available. Second option which is available is the swapping. So some swap companies have already come and they have launched swap in trucks and buses already. And we also have one model where we have a swapping which is done in just 3 minutes. So our 2-ton battery will be lifted by a hoist and a new 2-ton battery will come in that place. And the total time of switching is only 3 minutes. So that is second technology which is coming up. Third technology which is very viable and possible is the wireless charging. You put a wireless charging strip below the road, it is just ½ inch below the road basically you put, and there is an adapter in the vehicle which will catch charge from that strip. So that is the one technology. Pantograph is very popular in the Europe side, but it is very costly, tremendously costly. So if you say wireless charging is done in say 2 crore rupees, the pantograph will be done in some 12 crore rupees. So the cost is very high. And India being a very big country, so it is very difficult to go for pantograph right now. Initially we should start with the fast charging in the batteries, swapping and all that, and then maybe wireless. Pantograph I think will come very, very late if ever it comes.
Any other point? Yeah, we see 2 hands raised. If you can get the mic.
Do you have like a preference for open versus closed loop systems in terms of charging stations? And going forward, do you think that mix sort of impacts the ecosystem's ability to be okay with shorter term contracts versus medium to longer term contracts, do you think?
So when we talk about, you're getting my voice, no? So when you talk about closed loops, since you heard from the industry experts that public charging infrastructure is not so much easily available. Let's say we talk about Delhi to Jaipur. If we start flying the trucks from Delhi to Jaipur, how many public charging infrastructure is there? So that's why the Sunilji has just spoken about and Chetanji has spoken about this. So we are trying to work out the financial model which is currently at present, which is there on the table, is the closed loop. So we are evaluating the contract, the revenue model, so that we can start funding. Once the experience comes, then we'll be open for the other open sector kind of thing. Since the charging infrastructure is also not there, the enough data is also not there, so it's very difficult to build a financial model in absence of this. Thank you.
Just the one exception I would flag, I think it's absolutely right for the zero emission trucking that you need to get this infrastructure that is sitting there in place because you don't want to get another variable that's throwing off the system and it's not reliable from what is sitting there in the open ecosystem. We look not just at the heavy vehicles, we're looking across two, three, four-wheeler as well. On their open loop, especially with now initiatives like UEI playing out and enough of them playing through, it's allowing for larger utilization of some of that equipment to come through. So there are ways you can look at financing those models that are now allowing open systems with slightly better integration, but you still have to have some reason of like what you're trying to differentiate with versus the other open players there. But there is a play for open loop systems in that context as well.
Got it. And does it impact sort of you as a funder? Does it impact your willingness to take a shorter term contract if the infrastructure improves in, let's say, the next 5 years? Or is that not relevant at all?
So for us, we're a venture fund, so we're looking at how that is becoming more of an ecosystem play. I'll let the other.
So I would say that in case of certain within the city kind of intra-city use cases that may make a bit more sense, where you are seeing that, okay, there is some dedicated charging infra which you can identify for example, 2 to 3 chargers serving 70 three-wheelers. That is something which can be looked at, but again, those end fleet operators or the vehicle operators should ideally be working on a particular use case to have the utilization rates make sense. Today, EV, no matter what use case you see, is becoming economically viable if it runs X number of kilometers per day, even on the smaller vehicles. Or it lifts a load of X tons a day on the cargo vehicles. So some visibility of the end customer and why that person is going to stick in that use case is going to be important. If you say that it's going to be, that vehicle is going to be dedicated to a seasonal business where somebody can pull the plug off the next day for XYZ reason, I don't think that fits in any of the infra funding lens, private equity lens. In fact, for venture capital also, they may take bets on the technology that supplements it, but they won't fund those assets. I can strongly say that. There have been few and far between bets on that basis, and I don't think that works very well.
Got it, thank you.
Yeah, please.
No, go ahead. No, thank you, I appreciate it.
So, in what the Nishant has just spoken, to talk about is costing around 3x, 2.5x to 3x. Now, if you talk about shorter term contract, let's say 4 years, 5 years, correct? Then our proposition for lending will become a very short duration. That not will become meaningful for the end user customer to pay back us, because the EMI cost will go up in a very trajectory high value. So that will not be affordable for him. So that's one thing. Second thing is that since this is emerging technology, we are still trying to learn. As the Sunil also mentioned, that wireless charging has come, some batteries, there's new technology of batteries. So each and every day we are hearing about new technology. It's an evolving sector. So we as a lender should be assured of that money should come back. That only will happen by only long-term contract. Correct? And also important, the cost of the per kilometer cost which is end user is going to pay remains the same which is going to for the fossil fuel. That's you have to keep. The truck has to run little longer. We have calculated that if the fossil fuel trucks around 300 kilometers in a day, then EV truck has to, if maintain EMI and everything, has to run at least 400 kilometers in a day. So just think of that in that way. So that in right now, the short-term contract will not be a viable option, I would say. Maybe in near future, we can see as the technology evolves. Thank you.
Can we pass the mic that we have?
Work. My name is Smita and I represent a consulting firm. I wanted to ask a question around data, because the fact that this is an emerging sector, I think we can endlessly debate why data is needed and who will use it, etc. But having said that, because it's a new sector, it requires heavy investments, data is needed. So, 20 years back when the telecom sector started, there were 10, 12 players, the same challenge, no data available, who would sort of do such long-term funding, etc. there was this whole body which was set up, which would collate the data independently, and as consultants, we were called in also to say that, can you validate independently the data? And then there was one single repository of that data, authentic data, which was used by all the stakeholders, regulators, industry, financiers, industries themselves, because they were, telecom companies themselves, because they would benchmark one versus the others. Do you foresee a body or something like that to come in as one single body which collects all the data, publishes the data, manages the confidentiality of data, because obviously your competitors, financiers, etc., and a body like this coming together, independently validated data, do you think it will benefit the industry? Anyone, I mean, even Ankur Capital or anyone, yeah.
That, of course, that would do fantastic for the industry and everything. But see, we cannot compare EV industry at this point of time specifically with the likes of telecom. See, even they started doing it after an agency like TRAI was created by the Act of Parliament, right? So, problem is, this is an industry which is still in developing stage actually. And as of now, all the OEMs are fighting with each other. The biggest competitive your argument that you have against the other is my TCO versus their TCO. So sharing the data, as I said in the beginning also, we don't mind sharing the data, but the recipient has to convince us what he plans to do with that data. If that data goes out in the public domain, so that might destroy my whole narrative that I've been trying to build for years around my product. So this is why at this point of time, at least for the next, I would say maybe 2 or 3 years, sharing of data widely, whoever comes to us and demands data and we share this, I don't foresee that happening at least in the near future. But yes, some bit of data can be shared. Of course, we want the industry to grow. If the data can do good for the benefit of the industry, why not? I mean, we are willing to do that. But because the market is still developing and we are fighting, having a tough competition with between the OEMs on this whole TCO thing, so there it becomes very difficult for us to share the data openly. Sir, you'd like to add anything?
What you're saying is correct, basically. See, presently data is with the OEM and data is with the buyer. These two are the main players who are investing money, so both have data. Now, MHI has come with this scheme of PME drive, so they have also asked for data and they have all the right to ask for data because they are investing 500 crore rupees in the industry. So we are open to it, sharing to them. But as Chetan has correctly said, it should not be misused. Basically, see, a lot of people use data for different purposes, right? So that is the old dialogue of Bajaj na kitta deti hai. So everything depends on the average. Basically, what is your TCO and how much mileage you get per kilowatt hour. So that data is very important. So industry is open to this thing, share data. Only thing is that it should be used properly.
So just to plug in contrast, I think one of the other variables will be in this context versus the telecom. Where do you draw the line of this is the edge of the industry? I think ends up being another challenging element of if you are trying to create a central body to do that, which is mandated rather than driven by the industry forward. I think that will be another blurry line. That will be, okay, should this now be four-wheeler as well? Like what size of truck do we start to include in here? Should include the three-wheeler logistics truck, should include 2. So I don't see this being an organic forum to set it up to the same proxy of what you'd called out from the telecom proxy. Here, what I can see is areas where the market is mature enough that, I think you're all saying currently the battle is TCO, because there's also the primary battle is there's such a gulf between diesel and where the EV trucks are right now. As that kind of narrows out, I think there's an incentive then that gets led by the industry of saying, we know even if we're saying our TCO numbers, whether you're choosing between 1, 2, 3 of us, there is this incentive for all of us to put all that data out because we will beat the entire diesel trucking industry. And that's where I think that portion of it will come through, at least for this segment of the zero emission trucking space. So I see that being a step that will come at that point. For the other segments of the vehicular aspects, I'm seeing interest from OEMs there because on that perspective, the vehicles, if you look at their TCO and the ownership, it is so much more attractive than diesel-based or petrol-based vehicle that they're willing to actually share that with significant number of partners, saying, you can all look at it. Between us, you may have a view, one person may view one versus the other, but it's clear we beat that old industry. which I think the moment that you get to a tipping point even close to that, there will be probably more than one player. And until then, even if there was a mandated player, I don't know if, to the point that was raised earlier, that a financier still wouldn't want to underwrite it themselves by analyzing that. So I don't know if it serves a purpose in the context of where the industry is right now.
Yes. There were questions over there.
Hi, good morning. Financing, leasing, owning and operating of multiple decarbonization assets, which this would be one of them. The question again is actually a little bit of segue of the same discussion. Who owns the data? Is it the OEM who owns the data, the logistics company, or the owner-operator, or the lender who's actually putting the most amount of capital on the asset, right? I mean, if I'm owning an asset, do I own the data associated with it, or does somebody else own it and they're just sharing with me that data? So it's a very fundamental question on ownership, because sharing can be then is sort of a symptomatic item after defining the ownership of the data. So just thought I'd get your views on that.
Sure, data. I got your points. Sorry. See, ownership of data is basically, as I said earlier, there are only two parties. One is the manufacturer and one is the buyer, who is concerned about the data. Okay, my truck is behaving nicely, it's giving that kind of mileage which is assured. We have an agreement of 95% uptime, and it can be calculated through the data only, okay, whether that kind of uptime was available or not. So data is very important. So I say, okay, my vehicle will charge in 1 hour. Now the data will tell whether it is charging in 1.5 hours or is charging in 1 hour and 45 minutes. So what is the charging rate? I say uptime 95% in a year. So data will tell whether the truck was running that time or not. So data is important for the manufacturer. Why important for manufacturer? Because manufacturer will rework the weak points. He will see, okay, some points are creating some problem somewhere. Like you say, your tires are there, so how many kilometers they are doing, right? Your efficiency of the truck is there. Like I say, my gradient of the truck is 28%. Now, actually it is giving 28 or not, that data will tell. So data is very important for the manufacturer to make his model more worthy and make new versions of the truck interpreting the data. And the buyer will have a confidence, okay, I have done a long-term contract of 8 years with the LSP, and he has assured me so many kilometers per day. Now that kilometer it is doing or not doing. Generally we insist on 400 to 600 kilometers per day, because this is an asset, you run more, your payback is fast, okay? So that is a very important thing. So everything will come from data. So these two are the basic ownership of data will remain between these two. But now suppose the third agency comes with a subsidy and he says that, okay, I also want to know the data. So he has all the right, because he is investing 500,000 crores rupees in that project. So he has all the right to have data. So you have to see the ownership of the data, who is the investor and who is gaining out of that.
Also, if I may comment on this point, we have seen some of this already play out in some other segments. And if you look at the agricultural farm equipment segment in overseas countries, you'll see John Deere, although they sell the equipment outright, they still control the data part of it. They control the software, they control the data part of it. So we have seen a lot of this play out, some in very positive ways, some in not so positive ways, and this is also evolving as we go on. So as the market evolves, as it matures, as the performance of the vehicles becomes more and more public, we will see more and more data come out in public domain, and probably also the OEMs becoming more open to share the data as well.
So as a EV LSP, EV only LSP, there are two kind of basically data set. One is CAN data, one is uncanned data. So about battery related CAN data, we no OEM. Like when I'm saying no OEM means including IPL Tech, or whether we are in talks with every, even legacy OEM as well. They are coming with their own EV truck, and we have talked to all of them. Nobody at this stage is ready to share CAN data. Uncanned data, obviously, since I'm buying the truck, it's completely up to me, and the data means like we have those data, and that is being shared. Obviously, that has to be shared. Otherwise, we will not perform, we will not achieve efficiency. So that data is already with us. CAN data is still like, we have a flash of those data, but we don't have a rights to extract those data. So it's still like, and no OEM is ready to say that. Sorry.
Yeah, CAN data is slightly confidential in the sense that it is the internal thing about the powertrain or about the battery or about the other components which are practically working there. And our AMCs are dependent on the CAN data basically. So we have a CAN2B protocol in our system and we have CAN data available. But sharing to a level is available. More sharing can be done, depends on the case.
One more question.
So I think there is a great push by the government for the use of the electric vehicles for the waste management, especially the solid waste, and they have actually procured the EV vehicles and given to the many rural villages. Now, what difficulty as a user the Gram Panchayat is facing is that once the vehicles has any repair or repair issue, there is no local repairers available. So the vehicles is not operating for a week till the manufacturing company or the actual producer comes, repairs and everything. So how do you reduce this runtime if you have to actually, promote this EV vehicles in the municipal corporation? And my next question is also they are working with the large municipal corporations where they have this large diesel trucks which is running on a diesel and they have this heavy diesel motors which is like 10 HPs mounted on it. So we were I think also in discussions with the Tata Motors that how do we convert these vehicles into the electric vehicles because their actual dead load of the motors is also very high. So when you compare this with the electric battery waste, so how do you synergize those? I think they are still in R&D stage, but if you have any know more about this, like
Just development part of it, and I think if that can be elaborated on how that will be done.
I will answer your second question first and first question later. Your second question mostly relates to retrofitment, where you want to change the engine of the vehicle and you change with the powertrain basically. So that is already available in this domain and it is covered under AIS 123. So ARI has given a standard AIS 123, you can read that. And complete retrofitment things are available in that standard. And when we developed our first truck, we also developed a retrofit truck first. And later on, we converted to the new trucks basically. The first 5 trucks we have done retrofitment for our internal assessment. We have taken a Tata body, old body, and changed the engine and everything. Done the retrofitment and get it approved from ICAT under AS 123. And after trials, then we got the idea that, okay, this is not worth in case of truck, but definitely it is worth in case of cars and other things. So then we changed. So that was your second question. Retrofitment facilities available. Even you can see the RTO site of Delhi government. There are parties who are doing retrofitment and they are approved by RTO. Is given the list is available there. Coming to your first question is very interesting because I was earlier country head of Micromax for the battery division. So we have supplied a lot of batteries to the garbage vans. And there was a tender in Tamil Nadu for 500 garbage vans. We have supplied our batteries there. And after 2-3 days, we come to know there is some issue in the battery. Now there are two things. See, these garbage vans run only for 2 hours in the morning. They have to collect the garbage and whole day there is no work. They keep stand idle basically. So it will not go bad that early because it is not running actually. It is running for a very short while. What was happening actually, these guys from MCD and other municipal agencies, they were charging it very badly. Our engineer has gone there and they have seen the charger put in the washroom and some water is flowing on the charger itself and they were saying the battery is not charging and all that. So that kind of things were there around 2-3 years back because of low education level. Basically industry has to teach them that, okay, how to use this vehicle, how to run this vehicle. There were no skilling available at that time. Now a lot of skill councils are there who are training the drivers, who are training the technicians and who are giving the training sessions. And now industry is updated with this thing. So you have to handle this thing very wisely that otherwise I don't see any reason it will go bad. Because even in FAME 1 and FAME 2 scheme, see, they have asked for 3-year warranty. So any company who is making a vehicle or a battery definitely will see that the battery should not go bad for 3 years at least. So I think I answered both the questions. If anything extra, I can attend to it.
Sure, working with Blue Ashwa Capital. So my question is,
lately the narrative of government with regard to EV support, the messaging is changed over the years. There have been statements regarding the industry needs to be self-sufficient. Clearly, we discussed a lot of challenges that the industry is facing right now with regards to infra building, with regards to long-term contracts. What do you think? I mean, I had a chat with Chetan earlier regarding one intervention that the government can do. But what do you think is right now happening in those policy circles? What can happen more, right? And do you think, I mean, there are folks when talking about hybrid systems for trucking because of the long open loop issue. So what do you think things will pan out? Because I feel, maybe, this is my hypothesis, that zero emission trucks or electric trucks solution works best for probably closed loop systems, but for open loop, maybe we'll need an interim solution for the time being. I mean, there's broad questions, policy support, as well as do you think government is trying to push one solution for one area and another thing for another?
Well, the government has been quite supportive. There's absolutely no doubt about that. I mean, the FAME 1, FAME 2, and even the PM E-Drive, the manner in which the whole scheme has been structured is very beneficial for the industry. So we'll start with that premise, honestly. Coming on to, of course, we cannot expect the government to keep on subsidizing or providing incentives for years and years to come. Ultimately, the industry has to become self-reliant. Now, there probably lies our differences with the government, probably you can say, or whatever, the discussions, I would say, with the government. Buses was a success story, relative success story, because of largely the demands was coming in from STUs. Now, unfortunately, we are trying to write this same script for trucks. You know, we were discussing, and I told you a joke that, you know, there was a school kid who basically memorized the essay on, you know, my best friend. And in the exam, it came, write an essay on my best father. So he said, I have many fathers. Mohanlal is my best father. So what we have done is we found the script for the success of electric buses in India. We are trying to replace buses with trucks in that same script. It will not work because government is not in the business of owning the trucks. They might own buses because buses are for general good use of the public. So for trucks, you have to maybe, you know, make the private sector come forward and offer them incentives. Now, again, we cannot expect the government to start offering them incentives after incentive for years and years to come. One of the suggestions in the recently concluded Niti Aayog meeting on this same topic, that, you know, what are the bottlenecks and what would be the key enablers. So I gave a suggestion to the Niti Aayog CEO. I said, sir, trucks has a very peculiar problem. Those who have the capacity to own electric trucks are not in the business of owning the asset, and those who are in the business of owning the asset, unfortunately, don't have the capacity. Why don't you allow big infra companies, mining companies, you know, steel companies, to start procuring electric trucks as part of their CSR? See, whatever companies, I mean, Ajay is working with Lakshmi Cement. Why that company is, you know, purchasing or hiring a company offering them electric trucks? It is because of their moral obligation towards the environment also. So you need to incentivize them for this thought. Allow them to procure electric trucks as part of their CSR for at least 3 financial years. Now, this might require some bit of changes in the CSR rules, but government did that. During COVID, all the R&D expenses towards, you know, development of COVID vaccine was allowed as part of CSR. So you can do that for trucks for at least 3 financial years, and I'm sure that will generate the momentum from where we will be able to capitalize and build on.
I would just add that the government's narrative on this in terms of targets has not changed. If you still look at the projections on Niti Aayog, it's still at 30% in terms of the penetration. That's not changed at all. What they have seen is that the battery prices and the vehicle prices are going down. 2 3-wheelers have become economically viable to adopt on its own. And the trucking segment is something which they have not been able to explicitly support because of the challenges, but the bus tenders are still being supported in a big way. If you look at the e-bus scheme, there is going to be payment security mechanism which comes from the central government, which is going to support all the bus procurements. So it's a very exciting space where the government is supporting through various regulations and enablers, payment security mechanisms, procurement smartly, without losing money from the taxpayer's pocket or the exchequer. that's the construct with which they are working, that, okay, let's use our capital wisely. Let's not crowd out private sector. I'm saying that the way we see it is that it's giving private sector enough room to play and it's not crowding out the private sector. That's the way you must look at this, the changes and the policy directive that is coming through. They're not saying that the government is going to procure the buses. They're saying, okay, we're going to have it on OPEX basis. You have, I don't know whether you're familiar with the gross cross-contracting method in which the government and municipalities are going to pay on a per kilometer basis, and it's going to be bid out competitively by the private sector. And what you're seeing is that in the beginning, the tariffs which were charged, the charges on a per kilometer basis were slightly higher than they were used to, but now it's already becoming more competitive versus diesel. And you're going to see that play out in trucking, as we were mentioning, through various methods and battery costs going down and that penetration kicking off on its own.